Here's something nobody on Wall Street wants to admit. The AI boom is not slowing down. It's actually speeding up. And while every retail investor on the planet is crowding into the same 3 or 4 names, the Nvidias, the Microsofts, the big flashy household names, the real money is being made somewhere else entirely. 4 stocks. 4 companies flying completely under most investors' radar. Companies doing mission-critical AI work right now. And when you look at the fundamental data, the hard numbers, these are some of the most compelling setups I've seen in my entire career. Now, I want to be clear. This is not a hype video. I'm not here to pump stocks and disappear, where our quant team runs thousands of data points through our proprietary rating system to find the stocks the market has mispriced. We track more than 4,600 stocks. We rank them across 115 fundamental factors. And out of that entire universe, only 4 names rose to the very top of our AI-related screens. That's what we're covering today. In the next 18 minutes, I'm going to walk you through each one. The thesis, the data, the upside potential, and the risks you need to know about. No sugarcoating, just the analysis. Before we get into it, if you want more videos like this, hit that like button right now. And if you're new here, subscribe. We drop research-backed content regularly, and you don't want to miss what's coming. All right, let's get into it. Stock number 1 is going to surprise you. Stock number 1, Micron Technology. Ticker, MU. I already know what some of you are thinking. Micron? That's not under the radar. Everyone knows Micron. Fair. You've heard the name. But most people do not understand why this stock is one of the most important AI plays in the market right now. And they especially don't understand the very specific setup that makes this moment, right now, in 2026, so unusually compelling. Here's the thing. When people talk about the AI arms race, they talk about GPUs, Nvidia, Blackwell chips, massive data centers. All of that is real. All of that matters. But here's what most investors completely miss. Those Nvidia chips, those multi-million-dollar AI accelerators, they are completely useless without one critical component that almost nobody talks about. High bandwidth memory, HBM. This is the ultra-fast stacked memory that sits directly on every single Nvidia and AMD AI accelerator. Without it, the chips don't function. Period. So here's the brutal math. Every AI chip being manufactured requires HBM. The demand for AI chips is exploding, which means the demand for HBM is exploding. And right now, on the entire planet, only 3 companies can make it. Micron is one of them. Now here's where it gets really interesting. The other 2, Samsung and SK Hynix. Both South Korean companies. Both currently facing 25% tariffs. Let that sink in for a second. Micron is the only major American HBM producer. Every chip manufacturer in the world that wants to de-risk their supply chain from foreign exposure has one obvious answer: Micron. And look, this is a win either way. If tariffs stay, Micron's competitors just became 25% more expensive overnight. If tariffs eventually get rolled back, the supply chain diversification toward Micron has already started. That ship has sailed. But wait, it gets better. Micron is building a $15 billion DRAM fabrication plant in Idaho. They're also building a $100 billion megafab in New York, the largest semiconductor investment in American history. And they're doing it with a 35% federal tax credit. Do the math. That's potentially over $37 billion in direct cash rebates. Something Samsung and SK Hynix simply cannot access. Now let's look at the numbers. Revenue growth? Up 196% year over year. That is not a typo. Earnings per share went from $1.56 to $12.20 in the most recent quarter. That's 8x earnings growth in a single year. When we run Micron through our Zen rating system, which evaluates 115 fundamental factors across 4,600 stocks, Micron scores an overall A rating. That puts it in the top 0.7% of every stock we track. It's also the #1 ranked stock in the entire semiconductor industry. That is an extraordinary feat given the competition in that sector. Growth, top 4%. And this isn't just earnings. Revenue, cash flow, EBITDA, and profit margins are all trending sharply higher together. That consistency is exactly what our model rewards. Financial strength, also top 4%. Their soaring cash flow has allowed them to actively pay down debt and raise their dividend by 30%. Sentiment from Wall Street, top 5%. Of the 25 analysts covering Micron, 24 of them have either a buy or strong buy. That's rare. That's meaningful. And the street high price target? $700. From Tom O'Malley at Barclays, a top 1% analyst by historical stock picking performance. That target implies more than 70% upside from current levels. Now, the risk. I won't hide it. Micron scores a D for safety. Semiconductors are cyclical. They're volatile. The swings can be brutal. But here's my honest view. The AI-driven demand cycle we're in is unlike anything the semiconductor industry has seen. And Micron's combination of tariff tailwinds, U.S. manufacturing advantages, and massive tax credits puts it in a uniquely powerful position. I added Micron to my Zen investor portfolio back in December of 2025. Shares are already up over 70% from that entry, and I'm still pounding the table for new investors today, because the reason to own it hasn't changed. If anything, it's gotten stronger. The window on this one is closing. Don't say I didn't warn you. Let's shift gears, because stock number 2 is a name that almost nobody in the retail investing world is talking about. And that silence, that's exactly the opportunity. Quick pause. If you're getting value from this breakdown so far, hit that subscribe button right now. We've got 3 more stocks to cover, and the 4th one might be the most surprising setup of the entire group. You don't want to miss that. Stock number 2, Teradata, ticker TDC. I'll be honest with you, this is the one that most investors are completely sleeping on, and that's not an accident. It's a structural blind spot in how the market prices AI infrastructure plays. Here's what I mean. When people think about AI, they think about the glamorous stuff, the models, the chips, the robots, the chatbots. What they don't think about is the unglamorous mission-critical work that has to happen before any AI model can generate a single dollar of value for a business. Before an AI model can do anything useful, someone has to manage the data, clean it, organize it, move it, make it accessible across enterprise systems at scale. That work is invisible, that work is boring, and that work is exactly what Teradata has been doing for decades. Every Fortune 500 company running AI initiatives right now needs a reliable data infrastructure backbone, and Teradata is already embedded inside hundreds of these companies. This isn't a company trying to break into the AI space. The AI space is already leaning on it, quietly, without much fanfare, and certainly without the stock getting any credit for it. Teradata ranks in the top 1% of all 4,600 stocks we track. That's elite territory. The value component, top 1%. The financial strength component, also top 1%. This is a well-run business with real earnings power. And the market has inexplicably looked the other way. So what does Wall Street think? Eric Woodring at Morgan Stanley sees nearly 40% upside from current levels in the year ahead. Tyler Radke at Citigroup puts his fair value target at 63% above current levels. And Patrick Walravens at Citizens has the street high target of $49, which implies over 90% upside in the next 12 months. 90% from a company already embedded in Fortune 500 AI infrastructure. Now, the risks. Teradata faces real competitive pressure from Microsoft, Google, Snowflake, and Databricks. All of them want a piece of the enterprise data platform market. Teradata's moat is deep existing relationships and decades of embedded infrastructure experience. Switching costs are high, but those competitors aren't going away. Here's the bottom line. When a quality, fundamentally sound business gets this cheap, it typically doesn't stay that way for long. The market eventually corrects its mistakes. And right now, the data is screaming that Teradata is one of the most mispriced AI infrastructure plays available to investors. Stock number 3 is one that sits at the absolute center of the AI data economy. And here's the thing, almost nobody in the retail investing world is even talking about it. Stock number 3, LiveRamp Holdings, ticker RAMP. Here's what LiveRamp does in plain English. They help companies safely share, link, and activate data across different systems and partners without exposing private information. Now I know that sounds like back office infrastructure, unglamorous plumbing work. But think about what we just established with Teradata. In the AI era, data infrastructure isn't a back office function. It's mission critical. AI models are only as good as the data feeding them. And right now, every major enterprise on the planet is sitting on mountains of valuable data that's siloed, fragmented, and impossible to use at scale. LiveRamp builds the plumbing that fixes that problem. They're the connective tissue between data that currently can't talk to each other, enabling companies to feed better, cleaner, more complete data into their AI models. And LiveRamp is already embedded inside some of the world's largest brands and data ecosystems. As AI budgets grow, and they are growing dramatically, the value of what LiveRamp provides grows right alongside. Let's look at the numbers. LiveRamp scores an overall A rating, placing it in the top 1% of all stocks we track on fundamental quality. The financial strength grade is exceptional, built on meaningful improvements in earnings, expanding margins, and a strong balance sheet. But here's the part that really jumps out at me. LiveRamp receives an A grade on our AI Factors score. This is our proprietary signal, built on 20 years of market analysis, that identifies the most timely stocks. Not just fundamentally sound, timely, positioned to move. Getting an A on both the fundamental quality score and the timing signal in the same stock? That combination is rare. Now, the risks. LiveRamp operates in a competitive space. Google, Snowflake, and a wave of startups are all circling the same data connectivity market. To stay on the growth path, LiveRamp needs to keep executing at a very high level. But when a company ranks in the top 1% of 4,600 stocks on fundamental quality and scores an exceptional AI timing signal, that's not noise. That's the quant model telling you something. LiveRamp is an under-the-radar AI trade. Stock number 4, SanDisk, ticker SNDK. Now, you've heard of SanDisk? Most of you probably think of them as the company that makes the little flash drives you by at the airport, the thumb drives, the SD cards. That's not the SanDisk we're talking about today. SanDisk makes flash storage, the technology that underlies every data center, every AI training cluster, and every edge AI device on the planet. If Micron is the high bandwidth memory story, SanDisk is the mass storage story. Every AI model trained has to live somewhere. Every inference run stores data somewhere. Every data center process requires persistent storage at massive scale. As AI workloads scale exponentially higher, the demand for high-capacity flash storage scales right alongside it. We're talking about a multi-year demand supercycle that's still in its early innings. But here's what makes SanDisk's story particularly interesting. For years, SanDisk's flash storage business was buried inside Western Digital, a much larger conglomerate with a mess of unrelated product lines. Hard drives, consumer electronics, legacy storage products that had nothing to do with AI. What happened? In 2024, SanDisk was spun off as its own standalone public company. That's the setup. You now have a pure-play flash storage business focused entirely on the thing that AI demands most, at exactly the moment when flash demand is entering what could be the biggest demand cycle in the industry's history. The market hasn't fully priced this in, and that's the opportunity. Let's run the data. SanDisk holds an overall A rating, placing it in the top 2% of all stocks we track. Growth scores in the top 1% of all stocks. And remember, our growth rating measures the consistency of growth across multiple periods. SanDisk has been on a sustained upward trajectory. Sentiment scores in the top 4%, which tells us that sophisticated institutional-grade money is already paying attention. And when we look at analyst coverage, we're not talking about just any analysts. We've got Wamsi Mohan of Bank of America with a strong buy. Wamsi is a top 1% analyst by historical stock-picking performance, not top 10%, top 1%. We've also got Joseph Moore of Morgan Stanley, another top 1% analyst, equally bullish on the stock. When two independently rated top 1% analysts converge on the same strong buy thesis, that's not noise. That is opportunity knocking. Now, the risks. The biggest one is NAND flash pricing. Flash storage has historically been a cyclical business. Oversupply can hit fast, margins compress, and the stock gives back gains quickly. If AI capital expenditure spending moderates, even slightly, SanDisk could pull back from current levels. That's the bear case. It's real. You need to know it. But here's my honest assessment. The flash storage demand being driven by AI infrastructure build-out is unlike anything this market has seen before. The scale of what's being built, the data centers, the training clusters, the edge devices, requires a level of persistent storage that the industry is only beginning to ramp up to serve. SanDisk is the pure-play way to own that trend. And I put my money where my mouth is. I added SanDisk to my personal portfolio in February of 2026. Like Micron, we've already seen meaningful gains from that entry. And like Micron, I believe the most compelling reason to own the stock is everything's still ahead. All right, let's bring this all together. 4 stocks. 4 genuinely compelling AI infrastructure plays. Micron Technology, the HBM play. Only American producer of mission-critical AI memory chips. Tariff tailwinds, U.S. manufacturing advantage, $37 billion in potential tax credits, and 8x earnings growth. Top 0.7% of all stocks. I own it. Teradata, the severely undervalued data infrastructure backbone that Fortune 500 AI initiatives are already running on. Top 1% for value. Top 1% for financial strength. Street high analyst target implies 90% upside. Nobody's talking about it. LiveRamp Holdings, the data connectivity layer that makes enterprise AI actually function. Top 1% overall. Exceptional AI timing signal. Embedded in the world's largest data ecosystems at exactly the right moment. SanDisk, the pure-play flash storage story. Freshly independent after the Western Digital spinoff. Mass storage demand tied directly to AI scale. Top 2% overall. 2 independent top 1% analysts with strong buy recommendations. I own it. Do any of these 4 catch your eye? Are you already in any of them? Or do you have your sights set on something completely different? Drop a comment below. I read them all. And the insights I get from this community regularly shape future video topics. If you got value from today's breakdown, 3 things I'd ask. First, hit that like button. It helps other serious investors find this content. Second, subscribe and turn on notifications. I drop analysis like this on a regular basis and you won't want to miss what's next. Third, grab my free report in the description. 3 more stocks with significant upside potential that didn't make today's list, but absolutely should be on your radar. Thanks for watching. I'll see you in the next one.